Hi, I'm Ben Pullinger from ATEX Resources. We are just drilling out and developing and advancing the Valeriano gold-copper porphyry project in the Atacama region of Chile. To date, we have a resource for about 1.4 billion tons that's growing and have put out some pretty fun results along the way as we wrap up our phase 4 drill program here. Great to be on the show.
Good to have you here, Ben. We're here in Quebec. You were having meetings and telling people the story, etc. And we want to catch up with you because you're the new guy on the block in a way. Well done on the new role.
Thank you very much. It's great to be here, and it's a continuum, right? It's as the company grows and develops, we've brought some other people into the company as well. I mean, you would have seen on Monday we added Chris Beer to our board of directors, and he loves us so much he wanted to put some money into the company as well, which is, considering his background and where he comes from, sitting on the street for 24 years at Arbum, having him give us that validation, put his hat in the ring to be on the board is huge. And I think what we've seen in terms of new management changes at the executive level and now on the board, this company is getting set up to go in the right direction.
Is it more of the same, or as the new guy, have you got new ideas which you want to try and deliver? It was a good project. I'm not saying it needed change, but what's the new thinking?
I don't really think there is so much new thinking as so much as just, there's more to focus on now. We need more skills. It's not just about drilling holes in the ground anymore. It's about geotechnical work. It's about geometallurgy. It's about social. It's about government license. It's about governance. Like we're through a $300 million market cap company now, Canadian, depending on which day you look at it. And the company's come a long way. I think if you look at what we've done in 3 years, from $5 million to 300, it's just building out the disciplines to keep that momentum going, and keeping the energy up here.
I think the interesting thing, obviously, copper's done a lot of the heavy lifting in terms of the copper price. Obviously, we settled down to something a bit more normal around, whatever, 467, 470, we'll say, from the wonderful heights of 5. But you had to set yourself up. You had to set yourself up to take advantage of that. And you seem to have. The market's reacted well for the last 3 months for you guys.
Yeah, absolutely. And I think there's a bit more to it as well. I think I enjoyed your panel talking to the silver and gold guys earlier today. And I think copper is just a different beast, and is getting to know that the shareholder and the person who's buying copper. What I typically find is the people that are buying our story and have bought our competitors like NGEx and Philo and Solaris. These are guys that have a 7-year view on their investment. This is not like we're trading 1-2 years. We're not trading around the gold price here. There are really like big themes here. Like there's the global energy transition. There's copper projects are big and they take a long time to get over that hurdle. And I think seeing us go through $300 million with over $1 million a day liquidity, we're starting to attract bigger and bigger fish. But you're right, it's been a bit of a slow burn, and the copper price certainly helps. But then when you're putting out results like we did in phase 4...
Well, let's talk about that. Because I think, let's remind people about, for people not, we are new to the story and not heard the story before, remind people some of the grades that you're hitting out of the park at the moment.
Yeah, I mean, we'll start off with hole 26 is really to have that late in the program is a wonderful little tantalizing a surprise that we want to go back and follow up really badly. Just over 100 meters 68 meters of 2.02%. When you apply our metallurgical recoveries, remember, this is really an important part of the story because it just wraps into some of the regulatory things that we deal with in the day-to-day, but we report our copper equivalent grades calculated based on the recoveries that we use for our resource, which is 90% for copper and 70% for gold. Subsequent to that, we went and did that network and proved that this is a best-in-class system where we can get 95% recoveries for copper, 94% recovery for gold, and when you put those numbers in, that intersection is actually close to 100 meters at 2%. It's a late overprinting event, so it comes in after everything else. So it gives us optionality on that. And then on top of that, we continue to drill out the high-grade trend. The first hole of the program 16A, one of the first holes of the program 16A, we got 112 meters at 1.42% copper, 1.53 using our metallurgy.
Are these all the numbers you're talking about?
Yes.
Right, okay.
And then hole 25, which is really like a credit to our drill contractor. We started that hole at a minus 87 degree hole. It finished at minus 48. And once it got into that mineralized intrusive, it stayed in it and really was like the silver bullet showing that all this mineralization could be connected and linked everything up. So it's been
that's the next step for you, right? Okay, high grades is great. And people get excited. The headlines are fantastic. They will respond for a while, but you need sustained growth, and you're going to have to start demonstrating the scale of what you're looking at. So what are you going to do about that?
So we actually did that in phase 4. So phase 4, I would say, if I'm going to use 2 words to define what we have out of phase 4, it's scalability and optionality. Right. And it's exactly true. If you turn back the clock to September last year, we put out that resource. There's 2 important things that I like to draw people's attention of that resource. One, we reported not at our break-even cutoff. We reported at 0.4% copper. So what that was that kind of
the global average.
Well, no, but
wow.
if you look at most people that report their especially on systems like porphyries, they usually report at the break even. So at 0.4, which gave us a 0.7 if you use our network, 0.7 average grade, that's about $50 per ton, like rock on a recovered, processed, and royalty basis against $20 per ton global average for a block cave to mine operate. So decent margin there. Then within it, we had those 3 fingers of early porphyry. The central trend, which at that point was the 200 million tons at just over 0.9, so like high 60s, low 70s at $3.50 in copper and $1,800 gold. Today that's $100 rock, but back then it was more than 2-to-1 coverage on your cost to profit ratio, right? And that was what we wanted to show. We wanted to show that you could pay this back very quickly. If you're going to build Red Chris 10 million ton per annum processing facility and you're making $50-$60 per ton margin, that's $600 million in free cash flow. If you build something double that, which is still like a medium to big block cave, you're looking at you double that number, 1.2 billion, and that's at $3.15 copper. So you pay back $3 to $4 billion out of that high grade trend. Right now we get back into phase 4. Right. Now we're able to link that high grade trend up with the other things, show that we were able to drill between those 2 fingers, bring it all together. We have a high grade trend that's about 200 to 300 meters wide now. That lines up all the way to the northwest. It's about 600 to 700 meters long. And then we have hole 26 sitting right on top of that on the northern end. It's open along both sides and sits in a sea of kind of like well mineralized granite diorites that's still above the average, kind of above our average resource grade. And then for every ton of that, and that's an envelope now of 1.2 kilometers by 500 meters by about 700 meters wide, and all that is thrusting up into the rhyolite package. So you probably get 2 to 3 tons of that mineralized wall rock for every ton of that granite diorite. So this is, phase 4 has been a big game changer in terms of exactly what you said, that scalability. So we've gone from having 300 to 400 million tons of granite diorite, mineralized early porphyry in the resource, to now we have an envelope that's 1.2 by 5. So if you do the math on that, by your SG, you get close to 1 billion tons just in the granite diorite. Then you add 2 to 3 wall rock tons on top of that. That's a pretty big system. And then you throw in that little jewel at the end there, hole 26, and you have the optionality of something that you might be able to mine before and pay for everything else with. Right. So it's phase 4 and now gearing up for phase 5 is just getting more and more exciting.
It's super exciting, and I want to understand how super ambitious you are. What the intent is. You got a lot of money in the bank right now, but the stock has been as high as it is, and sometimes I think banking we use the phrase like take the money when it's available to you. How ambitious are you?
We are incredibly ambitious, but we're also very practical. If you look at our shareholder base, you couldn't have a better shareholder base. So when times were tricky last year, they stepped in, wrote like at market interest rate bearing facility for us to keep us out of diluting ourselves or doing dilutive equity. We encourage new shareholders who love the story. We've seen some pretty big names buying in market getting into the story. So we're ambitious and practical, but also we still have a couple more results to come out. Where we had the director change come out, we've got a lot of value that we still think we can generate. We've got news coming out, and then there's no secret that at some point between now and when we get into the year, like we'd love to either bring in a partner or raise some capital that gets us to the number that we need to put 5 drill rigs on this project by the end of the year. But we're, as you said, we have cash in the bank. We have long-term strategic shareholders like Trinity, BD, Pierre Lassonde backing us at Firelight. We have we don't feel that pressure like I think other people would right now, which is a very nice place to be.
It's a very nice place to be and very rare. Clarified area you're living in. Copper. We talked about it on a panel. I think you were listening to some of the guys talking. One of the Cisco guys, Bob, was talking. He said, look, if copper reached $10 tomorrow, it's too late. We are not going to be able to produce copper in the quantities that we are going to need it.
Yeah.
That has a knock-on effect.
Yep.
Copper will continue to rise in price. So for companies like you, is there any rush to get into production if you bring a strategic in at the end of the year?
I mean, I think the way I would approach this is really, should things be done to accelerate like the advance of good projects? Yes. Should consolidation be a theme that allows that allows synergy? Yes. Is there a place in the world where all these stars seem to be aligning? Yes. And we don't have Armin, our VP of Investor Relations and Business Development. He was telling me we need to come up with a catchy name that like links Nueva Union, El Encierro, and Valeriano together, because if you put those three projects together, you have over 10 billion tons of copper resource that are growing. You have Codelco drilling in the area as well. This is an absolute pristine patch of geological paradise in the Atacama, all on the Chilean side of the border, all with access to long-term access to water. And if you consolidate that, there's true synergy there. And in an environment where we're seeing Chile step up and say, look, we know. I was actually at Chile Day in Toronto last week, and I heard the finance minister speak, and it was brilliant. It says we understand the world needs Chilean resources, and we understand the world needs resources. What the Chilean government has now have bills in front of them that are being negotiated in the House or debated in the House as to how can we shorten the permitting time to bring these new projects online. How can we increase production of copper? These are the right conversations we have. We are a heavily regulated business as it is. And you're right, to bring on a mega project, like if you were to take Valeriano and merge it with El Encierro, seek the synergies with El Morro La Fortuna down the road, that would be a significant new production area for copper. And it's how that all happens, which is with the adventure that we're on right now. But I think that's what changes the shape of what we're doing. But it does take time to bring these assets online. Yeah.
Well, absolutely. And saying you guys going to insert yourself into that story, you're going to guide yourself along that narrative. But institutional or strategic partner, I should say, strategic partners, definitely part of the story.
Absolutely.
This year.
The one thing you can never time is somebody else's ambition. I would say I think we've demonstrated this is a project that people need to have eyeballs on. We have a very active dialogue with the right eyeballs, I would say, with good partners. And I would think, we're a $300 million market cap company right now. I think we've got a lot of growth ahead of us, but the ambition to build a $4 billion, $3 billion project is definitely not within us. We understand that we can explore, and we have. If you look at what we've done in 3 years, I think there's a lot of room for our market cap to catch up, just based on the fact that we've outperformed and done so much in 3 years. And again, it obviously talks to the underlying continuity and grade distribution of our deposit, which is phenomenal. It's spreadsheet mineable, I kind of joke around with. But I think it is because it's putting its hand up there as one of the best projects that's out there. It's already knocking on the door on our last resource of a top 10 undeveloped copper project. This next resource that we will probably put out there in the summer, Canadian summer next year, ahead of the PEA, I think is going to show some significant improvements. And I think it's just becoming something that people have to pay more attention to. And we'd love to see the right partners come in that can help us drive this consolidation in the area, because I don't think you'll see us being able to raise the capital in this environment to build that kind of project. And I think the value that we create now is de-risking this and putting more drill holes into it. Each hole that we drill costs on average, give you some rough numbers here, around $2 million, and it adds a 200-meter radius. Each of our drill holes are 200 meters apart, so given a 200-meter radius, adds about $500 million in its issue metal. But the return on investment on these holes is incredible, and it comes again. It's down to the continuity of that grade distribution once you're inside that model. Yeah.
Right. Well, I think we saw it coming last year. I love where you've got to, and I'm excited to see where you end up this year. But
I appreciate it. Thank you very much. It's always good to have you guys as partners, and I would love to continue to chat with you. Yeah.